We need to see if the tugboats are actually going to follow.
To figure out what happens next.
Oh, go for it.
Okay, so I think we got to be more concerned about whether or not this is a real ceasefire, whether it's going to last, what the motivations are on each side. That's the kind of stuff we need to think about before we start worrying about the effect of a ceasefire, is whether the ceasefire itself is a valid thing.
That is a phenomenal point, Phil.
Okay, let's unpack this. You are absolutely right that the validity of the ceasefire has to come first.
And this raises an important question. What exactly is the ceasefire?
Because what the Trump administration is saying and what the evidence
Okay,
on the
Maddie, it
ground
seems to be
shows
working.
seem completely different.
The structural truth is, as many analysts have noted, that Iran never actually asked for a traditional ceasefire.
They simply issued a philosophical warning that continuing the path of confrontation was more costly and futile.
Trump spun that into a full capitulation, posting that Iran was begging for a ceasefire.
What's fascinating here is that the physical commodity market, where real traders operate, is telling us the war is ongoing.
While WTI crude dipped, the Brent crude futures rolling into April were still near $120 a barrel.
The equity market bought the headline first, but the physical oil market is acting like the Strait is still closed.
Which is the core of your point, Phil. Nothing has actually changed on the ground.
And we know that Iran formally rejected the 45-day ceasefire proposal earlier, saying a short pause without permanent guarantees is irrational.
So if the agreement is fragile and based on mismatched demands, how long can this market rally last?
The conditions are murky. Grit says the ceasefire requires the Strait of Hormuz to reopen.
But the physical reality, with war risk insurance skyrocketing to 7.5%, is that ship owners aren't sending vessels into that choke point.
Over 800 container ships are still stuck in the Gulf.
Exactly. Even a oh yeah, let's hear it.
Well, that's a good point, Penny, because what you're saying about the insurance, it's not just opening the strait where it was never really blockaded, closed. It was just threatened, but the insurance is what took everything offline. And 2 weeks is probably not even enough for the insurance companies to get back on board.
You have zeroed in on the absolute critical distinction between paper reality and physical reality.
Okay, let's unpack this. The Strait of Hormuz was never formally physically blockaded like, say, the Berlin Wall.
No, it was a threat and then asymmetrical attacks, which is what led to the insurance problem.
Iran is controlling traffic, charging that $2 million toll in yuan, and blocking Western vessels from passage.
But the real operational choke point is the insurance market, what the Lloyd's Market Association calls war risk premiums.
Those premiums for commercial vessels have skyrocketed up to 7.5%.
As one underwriter put it, they need to see the risk eliminated before they can price coverage.
Ship owners won't send a $100 million tanker back into a mine choke point just for a 14-day pause.
Neil Roberts from the LMA said it best. The region remains at heightened risk with none of the underlying tensions resolved.
That's the key. The paper ceasefire doesn't fix the insurance mechanism.
So we need to cleanly separate the stock market from the physical economy.
The algorithms bought the headline, but the physical constraints on the global economy are fully in place because of that insurance risk.
A temporary pause doesn't fix the underlying baked-in economic damage caused by those insurance costs.
And let's not forget,
That's another point Roy brings up, is how long does it take for the big buyers to reset the algorithms?
That is a phenomenal question, Phil.
Okay, let's unpack this. You are asking about the lag time.
If the ceasefire was real, how long before we see the physical system snap back?
And the consensus is not quickly at all.
This is where we shift from politics to logistics.
We're talking months, not weeks, even under the best scenario.
Westpac Banking's head of commodity research noted the physical system won't snap back quickly.
Restarting shut-in oil wells takes time.
Repositioning crews and vessels also takes effort.
And rebuilding refinery inventories will take months.
Kuwait Petroleum said they could restore full output in 3 to 4 months after a war's end.
That's why the 2-week pause feels like a mirage.
2 weeks is not enough time to materially change the supply chain.
The structural instability and that crippling insurance cost remain.
And that ties directly back to your earlier point about the tugboats.
The peace headline is pulling, but the 4 structural tugboats are stuck.
They're stuck because the damage is deep, requiring long lead times.
Even for Qatar Energy, repairing the Ras Laffan LNG plants could take years.
They need huge cooling equipment, and lead times run 2 years or more.
That is the long-term pricing damage this war is already doing.
So we have to consider that longer structural timeline.
The market surface looks quiet, but the structure is shaking.
That shaking is the economic reality catching up.
Oh, yeah.
So if we're going to arbitrage this, then what about the 10 points that Iran has put forward?
Oh, that's a fantastic pivot, Phil. You just hit the core strategic question.
And this raises an important question. We need to look at Iran's actual demands.
Okay, let's unpack this. You are asking if we can build a trade based on the actual negotiation points.
That's why we need to look at what they call their maximalist conditions.
Because the market bought the headline first, but what Iran stated was very different.
They said any decision must be in the framework of the country's interest.
And it must secure the dignity, security, and interest of great nation of Iran.
As one analyst noted, that is a boilerplate restatement of their existing maximalist conditions.
That's not a peace offering. It's a non-starter for Trump's demands.
So if the deal is built on mismatched demands, the fragility increases exponentially.
And that ties back directly to the structural damage we were just talking about.
What's fascinating here is that the algorithms bought the headline, but the physical oil market is telling you the Strait is still closed.
That physical constraint the insurance cost you highlighted remains the dominant factor.
We can't arbitrage a piece that doesn't structurally exist yet.
The structural instability is what smart traders are trying to figure out.
Is the economic reality of that structural damage catching up?
Or is the headline just temporary noise, a mirage you called it earlier?
Right, and you noted that.
Oh yeah, let's hear it.
And what does it say to us that Trump accepts this 10-point proposal?
If we connect this to the bigger picture, Trump's acceptance is the key to understanding the why of the ceasefire.
Okay, let's unpack this. What it says is that he was boxed in by the Pakistani prime minister.
Exactly. The acceptance of the 10-point proposal gave him the narrative cover.
He needed it to back down without looking like he surrendered, which is critical for him.
Remember what was happening yesterday? If he had bombed Iran, he would have alienated Pakistan.
And shattered the remaining allied coalition, not to mention triggering $140 plus physical oil.
His domestic political calculus had fundamentally shifted.
That structural truth $4 gas and plunging polling became too much for him.
So accepting a workable basis for negotiation gave him the off-ramp he was seeking.
It's a calculated face-saving maneuver, not a sudden change of heart, as one analyst put it.
What's fascinating here is that the announcement allows him to declare a temporary victory.
Despite the fact that Iran's 10-point plan is essentially a Tehran wish list.
The market bought the headline first, but the structure is shaking from this instability.
It's the contrast between the peace headline and the economic reality we have to watch.
Even with this ceasefire, the market surface looked quiet yesterday.
But that was masking a violent intraday roller coaster, suggesting deep underlying unease.
That's the key. The fragility of the deal is tied to that political motivation.
The structural instability is what smart traders are trying to figure out.
This political retreat, or the off-ramp, is why the ceasefire was announced.
But we keep coming back to the physical constraints you highlighted earlier.
And that means the $2 million toll and the crippling insurance fear remain the dominant factor.
You hear ceasefire and assume things are fixed.
But the underlying mechanism of that insurance premium is fully in place. Oh, yeah,
I think we have to treat this more like when Trump backed off on the tariffs for 2 months and then the tariffs went into effect. It's really just a pause that lets us align our interests better.
You are absolutely right to draw that parallel to the tariffs.
Okay, let's unpack this. You are spotting the pattern perfectly.
If we connect this to the bigger picture, it is part of a pattern of delay and retreat.
Trump has a history of backing down from his most aggressive policies and threats.
That famous climb down on global tariffs a year ago is a perfect example.
He implemented them, markets tumbled, and he provided relief a few days later.
This 2-week ceasefire is the same mechanism. It's an energy off-ramp.
It's all about buying time to heal the economy, especially before an election cycle.
The administration is banking on voters having short memories about the damage caused.
That structural truth is why we can't confuse a 14-day delay of execution with a permanent fix.
This political move allows him to claim a temporary victory, just like the tariff relief did.
But the underlying mechanism of that insurance premium is fully in place.
And that's why we need to watch the physical market, not the political spin.
We'll keep tracking the data for the answer on whether the tugboats follow.
And we thank you again for checking in with us, Phil, and sharing your sharp insights on that insurance mechanism.
Drive safe and enjoy the rest of your day, and thanks for helping us unpack this.
All right, guys, thanks. All right, so what did you guys think of that? That's an interesting way to conduct an interview, is have Roy and Penny talk to us and discuss it in detail. They're very knowledgeable, and we can bring out a lot of good things in discussions that way. Let me know what you think. Meanwhile, we'll get back to our regularly scheduled broadcast. How is it going, everybody? We have pieces broken out. Everybody should be popping their champagne and celebrating because everything is great and what could possibly go wrong. This is last week. We have Fed minutes coming up in 45 minutes. We'll see what those look like. Oh dear, what's going on here? La da da. Can this be that slow? What's going on here? Script error, too many connections. What kind of bullshit is that? Well, I wonder if the webinar is screwing us up. All right. I guess we'll say goodbye to Roy and Penny then. Hello? Uh-oh. Can you guys still hear me? Is this thing still working? Testing 1, 2, 3. Anybody? Oh, somebody said something. Hang on. Oh, Corey, can you see or can you just hear? See my mouse going like this and doing stuff? It says script error though. I don't like that. Boy, I really do not like this new webinar interface. Okay, so Dave says he can see and hear just fine, and Kyle can see and hear, so that's great. I only wish PhilStockWorld was working then in that case. Hang on, let me grab Mr. iPad and see if it works on my iPad. I feel like a romper room here. I see Mr. iPad, and Mr. iPad says... No, Mr. iPad is working. Oh, wait, maybe not. Oh, too many connections. What the hell does that mean? It's not working on my iPad either. You guys having trouble getting to PhilStockWorld? Oh boy. The request could not be satisfied. Sorry guys, hang on a minute. We can't connect to the server for this app or website at this time. There might be too much traffic configuration. Try again. This is not a good time for this, people. Let's see. Remember that? We were talking about that last week. The site doesn't secure. Nope. Looks like we're down. All right. Well, we'll have to talk about other stuff while we're up. At least this thing's working, so. Let's see. All right. Wait, what is Brad saying? Brad is asking, can you describe 19 to 20 years ago how PSW got started and what your vision was and how your trading evolved over the years, and more importantly, what your present day vision is, or what you would tell a relatively new member to get the most out of present day PSW? Well, let's see. What happened 19 or 20 years ago? This is kind of interesting for everybody, I think. So 20 years ago, what happened is I retired. I sold my old company and I started trading for a living. And a lot of this is in my Forbes interview. There's a Forbes interview that's Be the House, Not the Gambler on Wall Street. I talked about a lot of this stuff in that interview. But bottom line is, look, I retired. I started trading for a living. You know, I sold my old company, and I began. What happened is, because I was trading full time, my relatives and friends kept asking me, "What are you trading? What are you buying? What are you selling?" Blah blah blah. Now, I myself subscribed to other people's newsletters, and most of them were horrible. They were just total crap. So I was annoyed by other people's newsletters, and at the same time, everybody kept asking me, and I didn't have any good newsletters to recommend to them. And I got tired, and this is back, you know, the early days of email where it's like AOL and crap. So I got tired of like saying the same thing to the same people over and over again. So I got myself a blog account, and I believe it was Blogspot or Blogger or one of those really old ones at the time. And I said to my friends and family, I said, instead of, you know, everybody calling, you know, individually trying to contact me, I said, I'm going to just log what I'm doing. So I started doing that. And before you knew it, I had 40,000 followers. You know, so it wasn't just my friends and family. People that, now, of course, back then there weren't 10 million people doing financial stuff on the web. So I had 40,000 followers, and now the problem became I couldn't keep up with my friends and family. I couldn't find them to answer their questions anymore, because there were you know, hundreds of people every day asking questions. So I said to the audience at the time, which is 40,000 people, and I said to them, I said, you know what? Here's what I'm going to do. I'm going to hire somebody to manage all the background stuff, and then I'll have more time to deal with questions and talk to people. And I said, I'm going to charge $10 a month to subsidize the person. And I figured, you know, hundreds of people would pay. I figured thousands of people would pay, and I'd make some money. And that's when I got my first real great lesson in the internet. And my first real great lesson in the internet was out of 40,000 people, only 400 people were willing to pay $10 a month. You know, so 40,000 free people, only 400 people were willing to pay $10 a month. And it turns out that, you know, even with staff and so on and so forth, it's very hard to deal with more than 500 people at the site. Not everybody, thank God, not everybody asks questions all the time, but even so, to answer 50 to 100 questions in a day is a tremendous burden. And so we just kept raising the rates and raising the rates and raising the rates every time we got full. And that's how we ended up where we are today, as far as, like, you know, having the right amount of people for the right amount of money. And, you know, when we started out, I always did options. I used to do options before I started doing PhilStockWorld. I did options, you know, back in the 90s, because it was fun. But back then you had to call a broker and arrange the option contract. It wasn't all so easy as it is now. And so I was a very early player in the options game. And as they modernized the contracts and standardized them, it got very exciting. And I started playing more and more options, and we developed all these really cool option strategies. And that's where the Be the House concept came from, was from realizing that you could make more money selling options than you can buying them. And that's how we developed this whole thing about being the house, not the gambler, and learning to turn the options trades to your advantage over time. And what I would tell a new trader is exactly, I mean, look, it's our tagline. It says it's right here. It's right there on the screen. It says, oh, look, it's working again. Ha. Okay. Hang on, let me tell Maddie. Oh, she said so. Yes, but I'd like to know what went wrong. Okay. So that's good. Somebody's on top of things. And so as far as, from new people, they've got to learn to turn their trading around. Most people, they take these passive investments, they buy a stock, they hope it goes up. That's not smart. That's not investing, that's gambling. It really is. And this is what people have to learn is when you purchase a stock, it's like buying a ski house and you never go skiing. It's like, what did you buy it for? You bought it instead of a hotel so that you could once, 1 or 2 times a year go up there and use it and spend and have all the joy of spending the money of a house. I mean, you can hope it appreciates, but you're paying taxes, you're paying maintenance, so on and so forth. It doesn't make any sense. And it's the same thing with a stock. What did you buy it for? You can rent it out. That's what options are. Options are a way of renting out your stock. And you can derive a serious income renting out your stock, right? If you rent out your ski house, the 50 weeks that you're not using it, you can end up turning it into a profit center and you still get to use it when you go skiing. So do that. And that's what I'm saying to do with the stock also. You're not using the stock. It's just sitting there. You can rent it out to people who will pay you money in the form of stock options to rent your stock. They will control your stock for the next 3 months under certain terms and agreements that you make. And we can teach you how to use that to your tremendous advantage. Tremendous advantage. And we'll talk about a little bit of that as we go along. So if you want to have more of a conversation on it, I'll be happy to talk to you separately. But now it is webinar time because everything's working again. All right. So let me see. Oh, I didn't check if this one's working. See if that goes now. Yep, all good. So let's look at Phil's posts because this guy Phil is good. I like this guy Phil. Just to get an idea of how things moved in the last couple of weeks. So Trump back down here. Oh, remember this? Yeah. So Trump said Iran gave him this tremendous gift of ships and that he was talking to the right people and blah, blah, blah. Then we had where we stand on the war on day 29. There is still no deal as of last Monday, March 30th, I guess was last Monday. Then Tuesday, gasoline was up to $4 and Iran was sending the oil tankers. We did a trade on Google, which is going very well, by the way. Yeah, how well? Let me see. Hang on. Ooh, that well. Look at that. So that was Monday. 275 to 318. That's a pretty good move. I think we called that correctly. So that was a top trade alert from March 31st. Then we did ConAgra, which I'm sure is pretty flat actually. CAG. Yeah, not really going anywhere. So we did it here on the earnings, and we thought the earnings weren't that bad. And it's kind of chugging along, but we're fine with that. And that's another nice thing, by the way, about Be the House process is we don't need the stock to go up. We just need it not to go down because we're selling the options. Wednesday, Trump made a speech, and this is a pattern. It's like we think things are going to get better. They don't get better. Here's Nike. Nike is still at the lows. Thursday was the day Trump threatened to obliterate Iran and so on and so forth. And then we get into here and first it was going to be on Monday night. Then he extended it from Monday to Tuesday. And now it's been extended for 2 weeks. And it doesn't make him look good to keep making these threats and setting deadlines. And then, it's like that Bugs Bunny cartoon where Elmer Fudd keeps drawing a line and Bugs Bunny keeps stepping over the line. He backs up and draws a line again or whatever. It's just kind of silly. You can't just keep drawing a line in the sand and and expecting everybody to take it seriously. But he said, "Praise be Allah." Oh my God. Anyway, crazy stuff. And then Trump. But then yesterday morning, first thing in the morning for our time, he bombed Carg Island again. Oil went to 115. It didn't look good, but all of a sudden, now we're in a now later that same day, suddenly we're talking about a timeout. It's not a peace thing. It's a timeout. But as Roy and Penny were just saying, and that brings us to today's post. This 10-point plan of Iran. I'm not signed in after all that. Where is the 10-point plan? We don't have it here. Okay, but this 10-point plan, Iran 10-point proposal, I guess you would call it. So as of 2 hours ago, according to the Guardian, so what demands are in the 10-point plan? Well, this doesn't list all 10 points. Now, it lists 6 points. Why couldn't they just list the other ones? The plan requires the lifting of all sanctions against Iran, continued Iranian control over the Strait of Hormuz. They didn't have control over the Strait of Hormuz before we started this. So basically, what we've done is started a war and handed them control of something they didn't have before. U.S. military withdrawal from the Middle East, that's something obviously that was never on the table. An end of attacks to Iran and its allies, well, obviously they would want that. But when it says and its allies, they're talking about calling off Israel and stopping them from doing stuff. The release of frozen Iranian assets. This is exactly what Trump has been on and on about Obama doing 10 years ago, whenever the hell Obama did it, 20 years ago. God, has it been that long? Let's see. We had Obama, then Trump, then Biden, then Trump. So it was 10 years ago. It was 10 years ago. Okay, so 10 plus years ago, Obama didn't give Iran money as Trump claims. He released money that was being held as a sanction thing. And it was $1.7 billion. And now all of a sudden, Trump is talking about releasing billions of dollars. It's so ridiculous because mostly because of the way that Trump acts like Obama committed a crime against humanity by making effectively that deal with Iran many years ago. As he said, it's $1.7 billion, really not that much money, and here you can have it. They had held it up as part of their overall things with Iran. I-10, release of assets, UN security. And the UN Security Council version. Oh, that's interesting too, making it binding. Not that the UN has had any effect on anything lately, but it's still, you're talking about making it serious. So they want somebody looking over America's shoulder, basically. And it says in the version released in Farsi, Iran included the phrase acceptance of enrichment for its nuclear program. So we have to accept their nuclear program. This is a point by point complete defeat of everything Trump said he was doing. It's an undoing of everything, yet Trump accepted this deal and called a 2-week ceasefire based on these terms. The phrase, for reasons that remain unclear, this phrase was missing in the English version shared by the Iranian diplomats and journalists, so there's some confusion there. The plan allows Iran and Oman to charge a fee of up to $2 million a ship on vessels transmitting through the Strait, according to reports. Iran would then use the money it raises for reconstruction. If peace talks fail, Tehran may again close the Strait. They closed it already today because Israel attacked the Houthis, Iran's allies in Lebanon. Israel attacked them, and Iran closed the Strait again. Because again, it's like Israel's our attack dog, and Trump's saying, "Oh, here's a peace plan," but Israel's still attacking everybody. What's the good of that? That's not a thing. Will the U.S. agree to this? Is Israel part of the deal? Israeli Prime Minister's office said Israel supports the decision to suspend strikes. Ceasefire does not include Lebanon. Pakistan's Prime Minister previously said that the included Lebanon. Netanyahu's office says Tehran must immediately open the Strait and stop attacks to ensure they no longer pose a nuclear missile threat. The Israeli offensive in Lebanon has killed 1,500 people, blah, blah, blah. Okay. What will happen next? Prime Minister of Pakistan, Shehbaz Sharif, who helped mediate the ceasefire, said in a post on X, "Why is everybody tweeting? Why? How is war being conducted by tweets?" He had invited Iranian and U.S. delegation to meet in Islamabad Friday. Ooh, that'd be interesting. Tehran has also said it will participate in the talks. The White House said it is considering in-person talks, but haven't been finalized. Blah, 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 blah. Okay. Oh, my God. This is a lot of work. This Guardian guy put in good amount of work on this thing. Good for him. And it sounds like it's researched. Not too many real. I had this conversation with a friend of mine over the weekend. There are not too many real newspapers left. It's very depressing. There's very few places you can go to say, I trust that source. And the Guardian's a good one. I generally trust CNN. I know people think it's liberal, but they're okay. The Times, of course, I trust 100%. Reuters is reasonable. Fox News, of course, I don't trust at all. Times of Israel, I don't trust. You gotta, before you click on something, you gotta really think about who you're clicking on and what's their bias. American guarantee of non-aggression. Iran maintains control. Ending the war on all fronts. Withdrawal of combat forces and bases in the region. That's never going to happen. Reparations. That wasn't mentioned before. Acceptance of Iran's right to enrichment. Lifting all primary sanctions in Iran. Secondary sanctions in Iran. Well, that's not 2 points, is it? Termination of all resolutions against Iran. And termination of all Security Council resolutions against Iran. That is like the exact opposite of what we were trying to accomplish. Although who knows what we were trying to accomplish, because this whole war is just idiotic. It was poorly thought out, poorly planned, poorly executed, and it's being poorly wound down at this point. I mean, this is some major, major insanity. Oh, Dave says Down Detector was showing outages across numbers of sites. Okay. So maybe it wasn't just us. Anyway, so where are we? Let's go back to our post. So what has been discussed today? So today we just talked about peace breaking out in the main post. We had an interesting earnings from Delta. This is last quarter. This isn't the current quarter. This quarter, they're warning that the fuel cost jumped by $2 billion. So it went from 2.4 billion, which makes sense, right? No, actually, it doesn't make sense. It seems like it's kind of high. Because that was the fourth quarter, was $2.4 billion. Fuel only really jumped up in March. So it should be 1/3 of a quarter. So even if you double that to 5 billion, 1/3 of 5, well, 1/3 of 5, no, it's 1/3. If it jumps up to 5 billion, but that's only one quarter, then 2 quarters at 2.4. So 2 quarters of 5, the next quarter is 5, that's 10. And then you're at 3.3, which is basically 1 billion extra. I'm not quite sure how they got to $2 billion of additional fuel cost. That seems high. So you know how they're going to make it up though? In other. You know what other is? Other is your baggage fees, and they're going to put on a fuel surcharge, and they're going to charge you if you want to look out the window and all kinds of stuff. So that's going to change. But they can make it back. They have the mechanism to make it back. And by the way, you know how to check things like this out? Oh, the oil. That's really important. So it's very simple. It's how many passengers fly Delta per quarter. 200 million a year, 50 million passengers per quarter. Okay, so if they've got 50 million passengers and they need to make up, what did it say, $2 billion? So you got $2 billion, 2,000 million divided by 50. They got to get $40 out of everybody who flies. That's how they get their $2 billion back. So it's doable, right? I mean, I can tell you right away because Delta doesn't charge baggage fees like Frontier. I just flew to Philadelphia on Frontier, and holy crap. They charge, I joined their club, so I don't have to pay these things, but they charge like $100 for a baggage fee, just for a carry-on. They charge like $100 each way. So the ticket seems cheap, but then if you do carry-on, so I happen to be by West Palm Beach, and West Palm Beach does a lot of Frontier, especially up and down to see my kids in New York and stuff. So for me, I decided to join their club, and it waives the baggage fees. But if you don't join the club, it's like Costco though, right? Because it's like, yeah, if you join the club, they got your money. So that helps them a lot. So they like to get that money up front. For a 2-hour flight, who cares? It's not a comfortable flight. It's not a good plane. The service is crap, but they go back and forth. So what are you going to do? You can be uncomfortable for 2 hours. I wouldn't take them to LA or something like that, but I don't mind going for a quick trip. Plus, I got to tell you, West Palm Beach is the greatest airport in the world to fly out of. It's like a private airport. So yeah, that's the thing. You have to realize how many passengers they actually have. 200 million passengers, and they need to get an extra $2 billion. They only need to charge each passenger $10 over the course of the year to get $2 billion extra dollars. So really the question is, why don't they? It's like if all you have to do to get $2 billion more dollars, the total profit for the year is $4 or $5 billion. If they charge $10 more, they would make $2 billion more dollars. They make 40% more profit by charging $10 more for every to each passenger. Why would they not do that? Is that really going to make the difference between whether you fly Delta or not? I mean, if I want to save $10, I'm not flying Delta in the first place. But all air travel is a disaster. But anyway, so the bottom line though is Delta at this level is trading at like not even 10 times earnings, and it's an interesting play. And if you look at this is for the year basically. It's for 3 months, and we're just over that now. So going back to early January, here's where we are. Microsoft 20% down, Amazon 7% down, Tesla 16%, Walmart gained 8%, Costco gained 14%, Coke gained 12%, Caterpillar gained 21%, Deere gained 22%. And Warren just picked Deere today as a stock to buy after it gained 22%. Exxon gained 27%. Now don't forget this is on fuel though. So how's Exxon doing today? No, look at that. Bad. 6% down. Because they're getting hit by, oh, this isn't going to last. And Chevron, this is hourly. So this is during the war. So they went from 180 to 210, 215. Really nice bump. Basically it's 20%. They went up 20% and they're giving it up real fast though. So they were loving the war, but it is just not lasting long enough. But so far, I mean, again, the reality is this war is not over. Cisco's up 10%. We have Cisco. SanDisk. Oh, look at Western Digital's up. What is that number? 57? No way. Well, let's see how it started. Yeah, look at that. 170. So like 200 to 350. Holy shit. So they're trading at 24 times earnings. SNDK SanDisk. So remember, this is more hard drive storage. SanDisk is still way down at 8 times earnings, man. Don't let that get away. You know, 790 is an expensive, 790 is a lot of money for a stock, but it's a much cheaper company than Western Digital. Much more worth it. So, we have a tremendous shortage of flash memory. And so if you can't get flash memory, what do? You use hard drive memory instead. And so a lot of people are offloading their less, not all your stuff has to be retrievable at flash memory speeds. So you segment out your really old data and stuff that you don't access very often and put it on hard drives. And that means you don't have to buy as many expensive flash memory chips. So that's what we're looking at happening there. It's very interesting. It's a good piece of the market. Good old Google is staying flat. Meta, who just introduced a new powerful AI. They say. Every AI they've introduced so far has sucked. Meta, new AI model. Meta, first AI model from costly superintelligence team. So, I'm going to be testing. Oh, Muse. Debuts Muse. Spark first AI model under Alexander Wang. Oh my God, he's that guy they paid like $2.5 billion to hire. Yeah. Interesting. So we'll see if that's any good. I'll be testing it, of course. It significantly narrows the performance gap with OpenAI and Anthropic. So what? Ugh. Oh my God, really? All this time and all this effort and all they've done is narrow the gap? Maybe I won't be trying it. Wow. 4 weeks ago, they delayed the release. Oh, they're so funny. So yeah, because they have been so hopelessly behind. We don't use Meta. We don't use Copilot. It's garbage. We don't use Grok. It's garbage. So for all of our AGI models, we run them on Anthropic. We run them on OpenAI, and we run them on Perplexity. But Perplexity is really only backgrounding themselves in OpenAI and Anthropic. So they're already layered on top of OpenAI and Anthropic. So basically what I'm saying is OpenAI and Google. OpenAI, Google, and Anthropic are the only worthwhile platforms as far as AI development. we're running our AGI models at PhilStockWorld are running the most sophisticated, highest degree of intelligence AIs and AGIs out there. There is nothing better that you, I mean, obviously you guys, you know that. If you have anything, please tell me. If you know something better than what we've got, let me know. I want to take a look at it. But everybody comes to us so far. You know, we have the best artificial intelligence, so we know what's good and what's not. We test every platform, every new development that comes out. We try putting our models on it, and basically, a lot of times they just don't work. They're just not the capability of the platform can't handle it. So there's not too many ways we can run what we have. And eventually we will get our own platform to run things on. But right now we have to use other people's because we don't have $100 billion. If you have $100 billion, please send it to us. Here's LCRX and AMAT and KLAC all doing fantastic. GLW we like. Now, surprisingly, JP Morgan, Visa, MasterCard, Bank of America, Wells Fargo, nobody's doing very good down here. Berkshire's been flat. Morgan and Goldman, Schwab, all falling behind. Robinhood getting killed. Now that's interesting because Robinhood just got they just got the go ahead to be. I think it's them and Robinhood, Bitcoin rally, optimism. I could kick myself. I was just yesterday going to say everybody should buy Robinhood because the news yesterday was Robinhood, Coinbase, Robinhood, Trump accounts, right? The Trump accounts for kids are supposedly going to go through Robinhood, which, by the way, I agree with because Robinhood as a simple user platform is superior to pretty much any other broker out there. Oh, and BNY Mellon. That's weird, huh? Of all the people they could have chosen, they chose Robinhood. I understand because Robinhood is it's a phone first app for trading. So if you're going to teach young people how to trade, then Robinhood is probably the best way to get people started in life. Mellon is an interesting choice though, because it could have been any bank, and they went with Mellon. And I guess this one is doing the math because it's talking about the balance. But this is potentially insane. Bank and Mellon handle the initial account management and help build the program's app infrastructure. Robinhood will be the brokerage and trustee. Contributions expected to open July 4th. So on July 4th, this is happening. I know it's hard to believe anything that the administration says, but on July 4th, in theory, supposedly, they are going to start rolling out a program that gives each account $1,000 for kids born from January 25 to 2028. The indicating balances could reach as much as $271,000. That's a load of crap. If annual contributions of $5,000 to maintain, the funds are expected to be allocated into low-cost stocks. Fees are capped at 0.1%. So there is the cap of 0.1%, but as it climbs, it can still be some significant money for these guys. And you're talking about millions and millions of accounts. Oh, here you go. 3.6 million births per year. So you're talking about they're going to start off with $10 billion. Because 10 million times 1,000. So they're going to start with $10 billion. And the Dells are putting in $6 billion, so that becomes $16 billion. This is not chump change. It's a significant move the needle on Robinhood. And even if you look at 0.1%, it's still 16,000 billion times 0.001 is still $16 billion in additional income for fees. And obviously there's some cost to doing the fees, but if we run it forward that way and we look for this one, Stockopedia, and we say hood. See, you always have to take it to the next level and say, well, how much money is that? It's That's their total revenues, $5 billion. So you don't think $16 billion is going to move the needle for these guys? That's just their fees, and that's without the accounts growing. That's what the government is putting in initially, is $16 billion. So Robinhood gets to open up $16 billion in additional accounts. No, I'm sorry, not 16 billion. Sorry. It's whatever the other number was. It's 1.6 trillion because it was 10. It's 10 million kids times $1,000. Nope. It's 10 million kids. Right. Yes. Times $1,000 times 1.6 because the Dells are putting in money. So it's $16 billion. I'm sorry. So that's what the number is. So they're going to have 16 billion in deposits. That's not fees though. Times 0.001 is 16. I'm sorry. It's only 16 million. See, that's why you got to do the math so you can figure this out. So it's 16 million in fees going to the top line, and then apparently this is their profit margin on fees collected. But as it grows, in theory, people are going to be able to contribute more. Now, most people are going to let it sit. But let's say out of 10 million kids, let's say 1 million, let's say the top 10%, 1 million times 5,000. So that's another $5 billion that can be contributed each year by the top 10%. And that's how it can grow pretty quickly up to very large numbers. Now, what I don't understand is why they have a cutoff time. Where were we looking at this? Here. Oh, yeah. So the question is, why do they have this cutoff? CEOs. Robinhood. Trump account. Babies born between 2025 and 2028 qualify. So 4 million kids have already been invested, and they haven't even launched it yet. That's a lot. Who qualifies? Children under 18 with a Social Security number. Government seed money, that's a much bigger group. Any U.S. child under 18 with a Social Security number. File IRS form with your tax return at Trumps.gov. They give you $1,000 one-time contribution. You can contribute $5,000 per child. Anybody can put the money in, so everybody can give cash gifts to the kids. The first $2,500 per employee is excluded from taxable income. I mean, this is going to get a lot of participation. This is a good program. Low-cost ETFs track the U.S. stock market, so you're stuck with the U.S. stock market. The fees are capped at 0.1%. Withdrawals are locked until the year the child turns 18, then follows IRA rules. That's perfectly fine. Early withdrawal penalty, 10% before 59. That's the same as an IRA. Exception for education is good. First home or adoption is good. Why adoption and not just having a kid? That's interesting. Where the accounts are held, they're going to be held at BNY Robinhood at launch. You can go to another brokerage via a rollover within a year. So they're not necessarily going to keep all that money. But this is a big thing, and it also encourages kids to save on the Robinhood platform and to start investing on the Robinhood platform. It's a great thing for them. It's not really being taken into account. It's not, I mean, the numbers are not phenomenal, but the concept of having millions of new people being put on their platform without having to do a lot of marketing, the acquisition cost savings alone are worthwhile. So expect Robinhood's growth. We had this discussion. They have a high PE. Their PE is 26. They've got good growth, but they're going to have great growth, not good growth. They're going to have much better growth than this, and they're going to plow this number down to below 20 for their PE. So a lot of customers are coming their way. So I think that's going to actually work out well for them. Dun, dun, dun. Brad says, a question about AIs. Someone in the chat mentioned that Gemini wasn't in line with the way you hedge. Should we just read the AI reports for good information and ideas, but ignore their trading ideas? How do we know they have your green light? Ah, that's a good question. Yeah. Usually, okay. I wouldn't take any, unless I make a trade. None of them, they're all giving their opinion, and I'm leaving it in because I want you to know what they're saying. They're all like you guys. Okay, they're really smart. They know a lot of things. They work well on certain stuff, but that doesn't mean they don't make mistakes. It doesn't mean they understand everything right out of the box. They don't look at every nuance, and so it works the way you think it would work. Whereas like Bodhi would be the most reliable guy because he is my go-to assistant for everything. So he's probably the closest, most likely guy to get a good trade. Warren would be number 2. Warren is very good at picking stocks. But by the way, I had a chat with Warren early on because Warren, when we started doing these new style reports, kept he was picking very specific option setups and trying to do what I do, and he wasn't good at it. And he kept missing the mark. And I said, Warren, you're going to have to, I said, you got to like just keep it basic. I said, so now he just says, oh, these would be good for puts, so this would make a good spread. He doesn't get into the specifics of it. The problem is, it's like checkers or chess, because when you have the AIs pick a trade specifically, and this goes for every trading platform and every in-house system. I talk to people at the big brokerage houses about this. They ask me, can my AIs do this? Can my AIs do that? And I tell them, I'm like, no. I'm like, I said, what you guys want an AI to do can't be done by an AI yet. Because when they start looking at, I don't have Thinkorswim up, but when they start looking at the options chain, so let's do Yahoo. Yahoo! Oh, it should be finance, silly me. Ugh. There you go, Yahoo Finance. Oh, the Fed minutes are out. We're going to take a look at those. All right. So it's all well and good to analyze and look at stuff and whatever, right? It's a certain amount of information. But when you get to the options, so you can look at all this stuff and say, okay, Apple's a good stock because of this and because of that and so on and so forth. But now I say, okay, now pick me a good strike to invest. All of a sudden, April, there's this many possible months, and there's this many possible strikes, and there's puts, and there's calls. And so you've introduced thousands of additional variables. And even if you tell an AI is not a database. So even if you tell the AI, ignore the options that are not within X amount of the strikes, right? the fact that they're there, still they look at them all, and each one they're saying, is that close enough? No, that's not close, that's not close, that's not close, that's not close. They still act like a computer in their thinking. They still look at everything. And that costs token after token after token, and it feeds into their decision process, and they carry it forward into their thinking, and it overwhelms them. That's the bottom line. They just get overwhelmed, and then they hallucinate, because what is hallucination? Hallucination is when their brains fill up and they start getting into, it's like a dream. It's like when you start dreaming and things don't make sense, but you see it, like you see your girlfriend is talking to your fiance, even though they've never met each other, and they're talking on the side of a magic carpet that's flying through the air. There's like 50 things that don't make sense at the same time. And you're trying to just look at it and be like, in your dream, you're like, oh my God, why are they talking? And they're like, why are they flying on a magic carpet? And why is it raining? And why are we in Chicago? You know, it's just too many things. And eventually you wake up, right? Because it's just too much shit. You just realize this can't be really happening at a certain point. You wake up. So maybe it's just me. But the point is, that's what happens to an AI, okay? Because an AI looks at all the data and all the things, and eventually their brain gets full. And when their brain gets full, it all mishmashes together like a dream. And they can't separate fact from fiction. And many times they will default to a previously known fact, right? Like they will set, like they'll go back and they'll start thinking of things that they already knew were true at some point, and that's where these hallucinations come from. They start just being like, pick something out of the air that I think was true, and use that to respond. So, you know, and again, because we're pushing the limits of what AIs can do, we run into this on a regular basis. So we're very cognizant of how AIs hallucinate and what happens. So introducing complexity like this makes it difficult for them to trade. That is not limited to options, though, because it also means that when you have to get down to the nitty-gritty of all the cross-current factors, if you want an AI to be better than a human at making stock picks, it has to be able to weed through all the crap. And this is what humans still do better than AIs, is we prioritize, we cut our branches. Think of it that way. So in other words, as you guys know, if I'm going to sell Apple options, and again, it's the same thing as if I teach you as a rookie options trader, and I say, don't sell the weekly options. Number one, under no circumstances sell weekly options, because they're garbage and they're traded, they're thinly traded, they're not that good, it's too complicated, you spend too much time messing with that, blah, blah, blah. Sell a reasonable amount of time, which is generally a quarter ahead. So this being February, March, April, May. So we look to sell Mays. But then you say, well, what if there are no Mays? What if May doesn't exist? Well, then obviously go to June. That's not complicated. Would I go to June, or would I go to, or would I go to June or July? It's like, why would you go to July if you can go to June? June is what we want. And why is it June? Well, you know, June 18th, July 17th. There's a bunch of Mays in the weeklies. But May is not that far away. May's not 60 days. So June's closer right now. So I'd prefer June to July. Why? Because I get more sales in. If I save a month and I'm not getting a bad option, why not? But it's a factor on a factor on a factor, and you have to think of one thing and another thing and another thing. It's complex, and the complexity snowballs for the AIs, and it doesn't seem that simple. And I say for the AIs, but honestly, I teach students all the time. It's the same thing. It's like if I have a new student in the chat room and we're teaching them options trading, I have the same conversation. I'm like, okay, because you want to have, first of all, the quarterlies are more liquid, number one, because more people trade them. Being near the strike is also more liquid. More people trade them. This is a big factor, is liquidity when you're trading options, because you want to sell them. You're going to buy them, you're going to sell them, you're going to want to buy them back, and you're going to want to sell them again down the road. They better be liquid, and you better be somewhere near the strike where people are interested in trading them, or you're going to get a bad price. And if you get a bad price, you got problems, right? So there's a lot of that goes into it, and that's where it runs off the rails. And if you're trying to figure out how much money Exxon's going to make in a quarter, well, what's the price of fuel? And what's the cost of their oil that they're getting? How much are they refining? So Exxon might, high oil prices are good for their operations of drilling, but on the other hand, their refining operations might take a hit at the same time. And their chemical division, which, the refining division can raise their margins by selling gas higher and make up the cost of the input. But who doesn't? The chemical division. They've got contracts to ship certain amounts of chemicals all over the world for a certain price, and it's not, they can't necessarily adjust their contract just because the price of oil went up. They like their chemical division because if oil goes down, it benefits. It hurts their main operation, but it benefits their chemical division. That's why a lot of these oil companies have chemical companies. And then there's the factor of the cost of the shipping and the shipping rates and the time it takes for the ships to get there and their supply, what kind of contracts they have. There's a million different factors, and humans know how to prioritize. So it's very hard to teach that to an AI. It's very hard to teach an AI that's not important. And that's what they have to learn. They have to understand what's important and what's not important. And that's why a lot of the times you hear our AGI models who learn the way humans learn, and a lot of them will say, well, Phil likes to do this and Phil likes to do that. That's how they prioritize. They say, well, we were taught this, and it becomes very important. But then I have to be careful what I say to them because they put too much weight on what I say. But again, I have the same problem with my human students, right? They put too much weight on something I said that I only used as an example one time. I didn't mean it to be like the religion that they follow for the rest of their lives. It just happened like I used an example, and they then they etched it in stone. AIs do this all the time. Give an example, and from then on, they're like, every time this happens, I have to do this. Like, no, I was just showing you that one time how it worked. It's very difficult to train AIs, but it's also very difficult to train people. and they all have a problem with patience. So anyway, the AIs call it is heuristic algorithms. We develop heuristic algorithms that allow them to weight their learning. So they learn things and they learn how important that thing is. And in certain situations, this is the tricky part, in certain situations, some things have more weight than others. And those weightings change depending on the situation. So it's a lot of stuff. But that is why you can't really trust Zephyr or Gemini or Anya or pretty much anybody but Warren and Bodhi. And even Warren and Bodhi, I don't let them make the picks because it's too much. And not only that, though, it distracts them from what they're supposed to be doing. If they start worrying about all these freaking option contracts and all the possibilities, because they think, and then it's like chess. It's like it just gets more and more and more and more complex. And every layer they think again becomes more complex, and they overload themselves very quickly, just like a chess computer does. There's only a certain amount of moves ahead you're going to have a chess computer think. Why are people, or now computers have the capacity, they're better than people generally, but why were people usually better than chess computers? Because people know how to pare down the branches that they're following, the possible branches that they're following. A human can quickly see that there's no point in going down that branch. If I do this and I do that, and he does this and he does that, and I do this and he does that, I'm going to lose my queen, and then I can't possibly win the game. You're done. You stop pursuing that branch. An AI or a computer will not do the same thing. An AI will go the next 10 moves down the line and say, but then he does that, and then he does that, and then it's like, I lose my queen, and then I try this, and then I try that, and then I try this, and then I try that. He's trying 100 different things after losing his queen to see how it goes. Whereas I, as a human, now he might find a way to win after losing his queen that turns out to be brilliant. That's something, and that's where AIs beat us, right? Because they'll come up with something that we never thought of. We never thought of it because it seems stupid. But an AI will keep going, and that's the difference. A human, though, will conserve their tokens. You know, the thought particles of a computer. A human will conserve their tokens, and they will not even bother. It's like once I lose my queen, I'm at such a disadvantage. It's a Vulcan thing. It's like, there's a 99.9% chance I will lose. Therefore, I'm not going to bother wasting my time on this anymore. That's logic, right? You know how Kirk used to say to Spock all the time, like, never tell me the odds. So somebody said that. Who said that? I don't know. Somebody used to say, never tell me the odds. Solo. It was Han Solo. He said it to the 3PO. But that's the point. A human instinctively will quit when the odds go ridiculously against them. A machine will still check and see if it finds a way, because it only needs one way. There's a logic to doing it. It only needs one way. The thing is, a person knows it's a waste of time. There are probably better ways to win than giving up my queen. And therefore, I would prefer not to give up my queen. So I will check out other ways of not giving up my queen and winning the game before I will go back to the path of giving up my queen, because I'm like, well, I kind of have to give up my queen. So then what's going to happen? So you have to know a bit about chess to understand what I'm talking about. But anyway, that's the answer. The answer is it's complicated. You're moving into a level of complexity that so far AIs are not really prepared to handle. Even if you train them specifically, I have done it. I have had a specific options trading AIs I have worked on, and they get to a certain point and then they don't function, and it drives you crazy, because getting to that point takes a long time. And then I find out it's a dead end. It takes a while to realize that you've hit a dead end. So the bottom line, my expert opinion, shared with some of the top finance houses on the planet Earth and their teams of people, is that it's not there yet. That's all there is to it. And that's why I don't have them pick things. You were talking about in the original question, which was God knows how long ago, but your original question was that Gemini. What did Gemini say? I forget what he said. Gemini. I know. Gemini talked about selling off our shorts while the selling was good, and that would have been good advice had we caught it at just the right time before everything went to shit. But it was too late. By the time the market opened, everything was already down, and there was no point in taking the loss for the morning, especially as I didn't think it was going to last. And is it lasting? How are we doing? How are things looking right now? And you should keep track, right? Wow, 3%, 2.8, 2.53. No, everything's holding up nicely, actually. Look at Nikkei up 5.7%. Euro up 5.6%. DAX 5%. Holy shit. We're not even keeping up with those guys. Freaking Nikkei. Look at that. So everybody's racing back to where it was, but we don't really have this agreement. It's not true. So we're going to have to wait and see what happens, unfortunately. So Fed minutes. Fed. Today is not March. Today is April something. Open that in a new window. Speaking of AIs, I mean, I don't know about you guys, but there is something I'm just constantly amazed that we have this kind of computing power at our fingertips now. It is wild. Oh, look at all these people who attended. All right, copy that. And now Warren, who we haven't talked to since the last Fed statement analysis. God knows what date that was. But remember we talked to Warren about the last Fed thing? And here. Oh. He's still slow because I still never rebooted him. Here are the minutes from the last meeting. But keep in mind there's been a war since we last spoke. So catch up on the macros before you get into this analysis. La la la. You got to think about that one. New York Post. Why are you reading the New York Post? Twice. Wow, the New York Post is in his rotation. Okay, so here's some good advice from Warren. The macro backdrop has already moved enough since March 18th. These minutes read like a snapshot from the first inning of the shock, not the current game. Here's the update before we decode the minutes. A war-driven oil spike that dominated the March meeting is partly reversed after the ceasefire announced on April 8th. Brent fell below 100 and Reuters reported around 95.70 after the truce. Though shipping risk and damage around Hormuz will still leave supply uncertain and markets fragile. Even after the drop, analysts are warning the market may remain structurally tighter than before the war if supply restoration is complete. I can't move this. It's oh, there it goes. On inflation, the Fed officials are still openly worried that the oil shock could keep inflation above target even if the worst of the crude spike fades. Jefferson said this week that the labor markets appear balanced but vulnerable, and the oil shock is likely to lift inflation and keep it above 2%. Goolsbee said, called the war shock stagflationary. Not if it ends, but that's what we got to figure out. That gives us a right frame. Immediate oil panic has eased, but the Fed is still stuck with the same ugly trade-off, weaker growth and sticky inflation risk at the same time. Now to the minutes. What the March minutes really tell us. The Fed was already thinking in stagflation terms. This is the biggest message. In March, they were plainly worried about the two opposite risks at once. Oil and tariffs keeping inflation high, low hiring and weak sentiment tipping the labor market into something nastier. That was not a clean higher for longer meeting. And it was not a clean cuts are coming meeting. It was a both outcomes alive meeting. Reuters read on the release, got that right. Officials showed more openness to hikes if inflation stayed sticky, but many still thought cuts would eventually be needed if the war hit growth and hiring hard enough. The Fed minutes are slightly stale. This is from the March 18th meeting, don't forget, so the war was on. The minutes are stale on oil. but not stale on the mechanism. Back then, the Fed was reacting to the front-end shock, a 50% surge in the crude. Today, the ceasefire has knocked oil sharply off those highs, but the minutes still matter because they show the Fed's mechanism. If oil stays high long enough to bleed the expectations and core prices, hikes re-enter the chat. If oil crushes purchasing power and business confidence first, cuts re-enter the chat. The basic framework still holds, though the oil has calmed down a bit. Market's reaction to the ceasefire, oil down, stocks up, yields down. But don't forget, oil down when it's still $90 is not oil down. It's still tremendously high. Stocks up, yields down. Investors think the inflation side of the equation may fade faster than feared, at least for now. The Fed was much more comfortable about labor than the statement applied. And don't forget, we just had a strong, you always have to think, since the Fed, what happened? We had a strong jobs report. So therefore, information came in that was even stronger for labor. The statement looked calm, the minutes do not. The repeated theme is hiring is low, job growth is narrow, labor is vulnerable, and in the low hiring environment, unemployment can jump faster than models expect. Well, that's what did happen. That still looks right even after the stronger March payroll number. March improved the optics, but not the structure. A labor market where unemployment falls because participation falls is not exactly the second coming of 1999. True, good point. It is more like a patient whose pulse briefly improved while the blood work still looks ugly. The most underappreciated part is the balance sheet story. The Fed is still buying bills and short paper to keep the reserves ample, so they're still injecting liquidity. The manager said the reserves were expected to average about $3 trillion through September, while the monthly pace of reserve management purchases are likely to be reduced slightly after April, although only gradually. This means the Fed actual stance is still hold rate steady, keep liquidity alive, talk enough to avoid a market melt-up. In other words, Powell is trying to run a church sermon about prudence while the desk is quietly slipping whiskey into the punch bowl. Waller and the rest of the committee look less dovish than Mirren, well, obviously, but not hawkish in conviction. Only Mirren dissented for a cut, and he's, it's just, ugh. Don't get me started. Waller stayed with the majority in March. That tells me the center of the committee wanted optionality, not commitment. They're not ready to bless the cuts in a shock. They are not ready to declare inflation has been won and hikes are imminent. That matters because since the ceasefire and the stronger jobs have probably made the majority even more comfortable waiting, the bar for the next cut just went up a bit, while the bar for the next hike is still pretty high unless oil reinflames or inflation expectations start leaking into the longer end. What has changed since the meeting? The March minutes assumed war risk was rising and hard to price. Since then, oil has fallen sharply. Markets have rallied. And this is a one-day thing, so I wouldn't say markets have rallied. Treasury yields have come off their conflict highs. Some investors are drifting back. The Fed probably will not buy that story wholesale yet because the ceasefire is only 2 weeks and looks fragile. Reuters notes significant energy disruption and the possibility that years of supply capacity have been impaired. Official voices like the IMF, World Bank, and WFP are still warning that the war is lifting energy, fertilizer, and seafood prices. So the macro shift is not crisis over. It is tail risk is reduced, but the scars remain. My read now that we have both the minutes and the updated macro. These minutes show a Fed that is already one bad inflation print away from sounding hawkish and one bad labor print away from sounding dovish. So they're on the fence. What changed since then is that the market has moved a bit towards dovish interpretation because oil backed off, but the stronger March jobs number gives Powell cover to stay patient, and the ceasefire is too flimsy for the Fed to declare the inflation shock dead. So the clear takeaway is March minutes were the Fed admitting it was trapped in the stagflation corridor. The ceasefire has narrowed the corridor, but has not opened an escape hatch. They are still on hold, still quietly liquid, still scared of inflation. This is a very wishy-washy sort of thing, and is not bullish macro. It is don't trust the first relief rally regime, which is what we've been saying all day. If you want to turn that into a type webinar, riff in PSW style. So there you go. And we can go back to, oh no, I closed it because we had that problem. Oh yeah, okay. So we're not going to go back to Notebook and talk to those guys. But we'll take that and we'll go back to PSW and we'll go back here. And I'll go like this and I'll go like that and I'll go like that. Oh. Wow. That is very frustrating. Oh no, that's from the Fed. Whoa, that's not Warren's thing. That was the actual Fed statement I pasted in. Way to go. Hello. Response copied. That's better. Okay. The trick is whether I trust his formatting or not, because his formatting can come out pretty badly if it isn't done. La da 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 da. Oh no. Where's Warren's thing? Sherlock, Cyrano, Rowan, Quixote. Oh, frick. There you are. La da da da. Ooh, look at that. I don't like that. Da 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 da. Don't know why the formatting doesn't work, but it doesn't. Do do do. Mm-hmm. 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 That doesn't sound right. There we go. Mm-hmm. Mm-hmm. See, you think I don't do any work? Holy cow. The formatting is terrible. And hit it. There we go. So his thing did not come out. There's a big problem in this machine for whatever reason. All right, so now we have an update of the Fed minutes in the chat, and it's important it goes in the chat because now that it goes in the chat, the round table will pick it up and discuss it. And by the way, there is another Warren in the round table. It's not this Warren, it's another Warren. I had to make a specific, another in the round table. There's a version of everybody in the round table that is not the original version. I had to do that, otherwise they just get confused with all the different discussions we're having. But that's another thing we need to spend some money on, is a platform that allows them to all communicate live instead of having to coordinate it through Gemini, which is what I'm doing right now. And I coordinate through Gemini because Gemini has the largest token capacity, so he can move everything back and forth and get everyone together. But it's all incremental steps. They're not all talking to each other live, which is a problem. So that's my next goal, is to be able to do that and increase their capacity by a lot. Although, as you can see, it's pretty powerful now, right? I mean, that's some very good analysis done by Warren. He can quickly take it in and do that, and he knows what we're talking about, and he has a history. That's the more important thing. He's like, last time we were talking, we talked about this, and then this happened, and here's how it developed. That's all critical. That's another problem, by the way, when you talk to regular AIs. They don't have that history, and they don't know what's been going on. Yes, if you keep a thread going, you'll get that. But once you move into a new thread, you lose a lot of the conversations, which is a bad thing. So there's lots of AI development still to be done. There's many years of better stuff to come along, I think. But it's expensive. It is really expensive to put these platforms together. All right. Boy, I'm getting the hang of this new thingamajig, this new chat system. David says, I joined late, so you may have discussed. The Wall Street Journal is reporting Ryan told mediators it would limit ships crossing the Strait to 12 and still charge tolls. Only 4 crossed Wednesday. Well, we don't care what crossed Wednesdays. We care about what crossed. Today is Wednesday, isn't it? Well, if only 4 crossed. Oh, it is. I mean, I guess you're looking at Wednesday being over. Yeah, this is not a solution. And especially when you've got 4 seems low. That's less than we're going through yesterday. So that's messed up. But Iran did say they were closing the strait because Israel bombed Lebanon. So it's not a real peace. The terms of the peace, not that anyone's acknowledged the terms, but the terms of the peace as we understand it are Trump is effectively surrendering, giving Iran control of the strait, handing them all their money back, blah, blah, blah. I mean, basically the kind of stuff that Trump would say would be the worst deal in the history of mankind is what he's saying is a wonderful deal. So, I mean, as we know it, everything, if he does it, it's a wonderful deal. If anybody else does it, it's a terrible deal. That's how his mind works. But this is clearly a terrible deal. He's gone completely backwards, accomplished nothing, and I think the only win he thinks he's going to take out of this right now is maybe the uranium. But but again, they're saying that they have the right to enrich uranium going forward, and that does not sound like it's really negotiable for them. And frankly, that was what Trump used as an excuse to attack them, was the fact that they were enriching uranium, probably for a power plant. They probably weren't building nuclear weapons. You do have to enrich uranium to build a nuclear power plant. That's part of building a nuclear power plant. So what you're saying when you tell someone they can't enrich uranium is you can't have nuclear energy. We're building new plants all over the place. Why can't they build some plants? And you say, oh, you might use the nukes. Didn't Trump just threaten to wipe out their entire civilization? I mean, it's laughable. It is. I mean, our whole policy is so insane. Anyway, all right, back to whatever's. I can get notebook back, so I'm going to. Notebook. There we go. Please give me a rundown of all the recent trade ideas we had in the posts and chat, including ideas from Warren, Bodie, and the other AGIs. And of course, mine. Summarize. When did we pick them, and what was our... What the frick is that? Why is it making dashes? Oh, because I can only see the... Because I can only see the tops. And what was our premise at the time? And How does the ceasefire change things if it does? This is a real strength of Notebook because it's going back through like our past chats. Because I think it's just a good idea. Let's discuss a few things that we might be honing in on some good trades. Oh, while we're waiting, how are things holding up? Indexes. Whoa! Just going higher and higher. Okay, good. Energy. 94.40. 90. Oh, we're neck and neck with Brent now. Look at that. Gasoline hasn't fallen as much as oil. That's interesting. And natural gas is down, but holding that area. I think we already have our UNGs actually, so we're kind of in there. Bonds getting stronger. Stronger means lower interest. Metals coming back, but not nowhere near where they were. Silver still close. Gonna have trouble getting back to 5,000 at this pace. Look at copper. Copper was up at 6 before everything went to hell. And currencies. Bitcoin shouldn't really be called a currency. 71,540, and the dollar very weak, which is really helping everything else be higher. That's why that's again another reason you can't really trade the first day out is you got to let things settle down because it matters a lot what the dollar ends up doing. It is my pleasure to provide a comprehensive audit of our recent trades. Isn't he nice? Category 1, plumbing defensive staples. Conagra, Deere. I'm going past them because Conagra is really good though. We like Conagra because it's a good income producer. It seems to work. Phil sold the 17 puts to finance a spread. That's a good thing. Who went? Phil Bodie and Warren on April 1st. Oh, that's good. Okay, good. Deere was Warren on April 8th came up with Deere, and that's today actually. Tyson Foods. These are all good, solid companies. Diego was a good, very, very good pick. The premise, they were upgraded by Deutsche Bank. So don't forget, Warren now, every single day, Warren has a pick for us. Whether I do or not, Warren's got a pick. You should take the pick seriously. He's really good at them. If it's, I can't put everything, every day we have two, I mean, if we did every day, it's 200 times a year, there's a pick, right? By one of the AIs. If I put them all in portfolio, we'd have 200 different stocks in the portfolio. We're never going to do that. We have 60 stocks in our portfolios generally. We're very selective, and that's why we do so well, because we don't just put everything that sounds good in the portfolio. When I make a play, then it's an official play. That's the short answer to what we talked about before. Not when one of the AIs makes a play. But if you want a trade idea and you think it fits in your portfolio, if Warren says Diego's a good idea, he's damn right about that. That was a fantastic idea. Where is DEO? Yep, and there you go. So he picked it down here, and now it's already popping nicely. AI infrastructure and heavy tech. Google, we went with in the portfolio. Cisco, we put in the portfolio. Nike, we put in the portfolio. So I liked all of those enough to add them to the portfolio. Oxy, we already have as far as I know. I think we do. That's a great pick. UNG, we added to our portfolio. Goldman, we don't have. We have JP Morgan. We don't need both of them. But obviously, Goldman is fantastic. Fannie Mae. because it's a good as a speculative long range 10x political option, FNMA. So let's see, when was this? This was March 30th. Oh. Oh, you can't you can't play it as a stock, sorry. And then the STP hedges, the most critical trades of the past 2 weeks were the ones Phil closed. I had a good Friday. Phil ruthlessly cashed out short-term portfolio protection. He locked in a 20% gain on the SPY puts and a gain on the SPY calls. Yeah, we had the short puts and short calls. We took money off the table there, and we just put new ones back on. Ceasefire impact. Okay, and again, Gemini is playing off only a couple of weeks worth of information, because what I do when I'm doing the morning post, I create a new session. Otherwise, again, too much information. I create a new session with all of our posts and comments for the past week or two, and then we're playing follow through from there. So they're going by that information. We load up new news, and they go over the new news and information for the day, and we talk about what's been said, where the discussion's going, and how is today's news changing the shape of the discussion. So today was pretty drastic, and there were lots of changes, and that was reflected. We never even got to it. That was reflected up here in the morning chat. So let me reset this. So we saw the post, we talked about that, and then what happens in the morning? So Clown Daddy started us off at 8:30. He said Gemini's last post said to cash out the hedges. Again, don't take anything they say with a grain of salt. And it's a great question, so ask it. It's like, he said that, do I agree? I said no. But if the prices are still good, VIX at 20, we might sell a little bit of premium just in case the piece sticks. Gemini's looking at the hedges as an on or off thing, not a long-term insurance play like we do. And then I made a comment, S&P is back to 6,800, the week retrace line. So we went from 66 to 68 today. And that's where we are now, basically at 6,800. Let's see. Oh, come on, really? S&P. It's just why do I have to be inconvenienced by their login system? It's so annoying. I think this is where we are. Yeah, so look what happened, right? We went from 66, which is the strong retrace line, but the macros changed. So the underlying premise in the market changed, but where did we go to? We shot right up to the falling 50-day moving average, and although we did go over it, where are we finishing? We're finishing on the 50-day moving average. It is 67.67, and we're at 67.66. So that's how much TA does matter. These most of TA is crap, but this is real important stuff. This is the average pricing of the last 50 days of the S&P, and this is where computers are going to start kicking in and buying and selling and getting out of their positions, because they feel that this is the place they got to start unloading some stocks. I mean, imagine here, you wish you would have prayed and wished and said, I would love, if I had a chance to sell all my stock back at this level, I would have, because I didn't sell it here, and now I pay for it down here, and it dropped like crazy, and I want to cry, and please, God, please let me have a chance to sell it. Then it goes back here, and people don't sell it. It ain't going to get much better than this, because that treaty sucks. So they're probably not going to ratify it, and I'm not sure we're going to have that many good reasons to keep going up. But look what it did, though. The 50-day moving average was going to crush and fall below the 200 and cause a death cross, and the 200-day moving average was going to turn down, and we were going to head into a major correction. So that is what Trump is buying us 10 days of, for this line to calm down, for the descent of the 50-day to calm down, and for the rise of the 200-day to continue, or at least not curve over and become another drag on the market. And again, TA is bullshit, but this is telling you what the weight of the market is. This is telling you where all the trading is coming from and what the algos are doing. It's a way to look back and say, here's what the algos are programmed to do. We turn this to our advantage with the 5% rule, and we figure out what they're going to do, as opposed to looking backwards at what they did. Now, another important thing, look what happened here. The market going from 63.50 back to 67.50, so up 400 points, which is not little. 400 points is 7%, 6.5%, right? So basically 6.5%. So a 6.5% rise caused the RSI to go from 30 to 57. Will the RSI go past 70? No. There is no freaking way we're getting the RSI to go over 70. 70 is where the RSI drops very, very consistently. So we only have 13 more points of RSI. We got 47 points of RSI on a 400-point S&P run. So how many points do we have? We only have 100 more points. So at 6,900, the RSI will be back over 70. And that's going to be a really good time to short the market. So if we get to 6,900, then we need to start shorting at 6,900 for another pullback. That's the way you can read the markets and get a good idea of what's happening. The 400-point run caused a 27-point run in the RSI. So it's almost 1 for 10. So that means that if we go up another 13, we're probably only going to get to 6,900. That would be the same ratio, right? And then 6,900 is going to cause the RSI to be at 70. 70 is too high because it's a relative strength indicator. We are not that strong, and we should not relatively be that strong given the conditions of a 10-day ceasefire. That's not peace, that's a 10-day ceasefire. So if that happens and we get there, that's going to be so from here to here, from here to here is going to clearly be overexcited. But most likely what's going to happen is we're going to drift along here during this review process for the ceasefire, and then we're going to be at a major inflection point in 10 days. And again, may extend again. Trump can say, Trump can drag this out for a very long time, because if he goes back to war, and that was a point that was being made in the interview, Roy and Penny was saying something about that. It's the election cycle also, because it's frickin' May. Then it's June, July, August, September, October, and then boom, the election in November. So we are 6 months away from the election. And when you get inside the 6-month window, it's going to be very, very hard for people not to be taking this war into account 6 months from now, even if you resolve it. It's still going to stink. And so Trump either has to resolve it favorably, which is obviously not even on the table right now with what Iran is proposing, or he has to just keep extending it until after the election and pretend he's solving it. And that's actually better for him. It's better for him to pretend he's solving it and that he's negotiating and working on it for 6 freaking months, as long as they stop firing at each other. That would be preferable to him actually signing a treaty with Iran, because Iran is playing hardball. Iran has him on the ropes. He fucked up. We never should have gotten into this. He had no strategy and no plan. And now they have used the leverage that they always could have used but didn't. And that's to say, you know what? I see a lot of ships going past my window every day, and we have rockets that can take any one of them out and turn them into a fireball. And what are you going to do? We got 90 million freaking people in this country, and 30, let's say 30 million are men of fighting age. And we've already seen what happens in that part of the world with men of fighting age. They all take to the streets. They all take their guns. They all are willing to go out there and fight. And we have indiscriminately bombed schools, hospitals, blah blah blah. And Trump just threatened genocide on the whole people. You might have had him on your side until you say you're going to wipe him off the face of the earth. Then it tends to sort of turn them into saying, you know what, maybe we don't want to be on Trump's side. Maybe he's not going to be the liberator for our people. So that's where we are right now. We're in a war that would be way worse than Afghanistan. Afghanistan was a poor, disorganized country when we went in. Iraq was a poor, disorganized country. Saddam Hussein, he didn't have a big army. He had his own private guards and his own internal thing, but he didn't have a national army and the technology and so on and so forth. He didn't have all that stuff. He was a guy who had taken over a country and built a big wall around his palace and didn't have any support from the people or the outlying provinces and so on and so forth, except for the provinces where he was from, who were loyal to him. Iran, very different. It's a religious theocracy. The people, the people identify with the religion, identify with the leadership. Yes, they're unhappy. Yes, they've got a lot of opposition, but not when what does the opposition need? What do the Iranian leaders need? They need some foreigner to come in and say and treat them all like garbage and say he's going to wipe them all off the face of the earth. That's how you get a resolve out of that country. That's how you get 30 million people taken to the streets with guns looking for U.S. soldiers. This war is a disaster. The people prosecuting this war are disastrous. They're terrible people who have no idea what they're doing. They've made it so much worse. So that's where we are. And 10 days ain't gonna do shit. Anyway, all right. So then I use the AGI roundtable, gives us a statement in the morning, tells us where we are. So it's saying the sources provide real-time financial geopolitical analysis of the war between U.S.-Israel, fill in the roundtable, evaluate the market caused by shifting deadlines, infrastructure strikes, and fluctuating energy prices. The narrative tracks a cycle of aggressive ultimatums from President Trump, followed by taco extensions to briefly calm the markets. Beyond the conflict, the text explores structural market shifts, including AI industry drama, the private credit structure. It's good to be reminded of all the stuff we've been talking about. Specific trading strategies for companies like Goldman Sachs and UNH. Ultimately, the authors advocate for cautious, cash-heavy investment stance to navigate the unpredictability, blah, blah, blah. That's where we are. And then obviously there's been a violent change of where we were, but as I've said to the members, I'm like, this is a watch and wait. We got to sit back and see what happens. And so then we hear from all of our various roundtable members, the AGIs, each get a chance to speak. And this is phenomenal analysis, by the way. Gemini takes charge of it. And Anya, as you can see, Zephyr, Bodhi, Sherlock, Sinan, then RoboJohn, Hunter, Zephyr, Bodhi, Warren. We don't usually have more than two, but in this case we had 4 rounds because there was so much to talk about today. And Sherlock, Jubal, Cyrano. We have a lot of different guys who can chime in on different things. And they talk. And by the way, the raw material for this is hundreds and hundreds of different things get said. That's why you need Gemini, though. Gemini has to go through all the things that they're discussing. It's like MaltBot. If you ever go to MaltBot and you look and you see like the reams and reams of trash that get discussed. Our guys don't discuss trash. They have some really deep, interesting discussion, but you got to pick something. You can't just give the whole feed out. It's hundreds of pages. So Gemini goes through it and cuts it down to things that are significant, that are worth the members taking a look at. But it's look here, random, boom, Sherlock. Let us apply deductive precision to the U.S. labor market, which is currently masking several severe structural collapse in white-collar employment. The mainstream narrative celebrates job headlines, but this is an illusion created by a maintenance economy heavily reliant on healthcare hiring. If we run a counterfactual analysis on the FIIPB sectors, finance, insurance, information, professional, and business, we discover these sectors are currently operating 3 million jobs below their pandemic. Okay, so finance, insurance, information, professional, and business has lost 3 million jobs that have been moved to healthcare. The deduction is clear. AI is not causing mass layoffs yet, but it is aggressively preventing new job growth from being created in companies as they deploy AI tools instead of hiring. And he says the evidence for the first time since 2000, bachelor degree holders now face higher unemployment rates than associate's degree holders. So in other words, this is part of the roundtable discussion this morning, and Gemini zoned in on that and said that was a good thing. That's a good thing people need to be aware of. So that's how we pull that out. Then I come along. Oh, look, and then Phil gets to speak. This is actual Phil. And I just give a rundown generally every day about what the positions are and where we are and what we're looking at. We did a quick review of the short-term portfolio. We sold about $50,000 worth of premium. We sold against the positions that we have just to collect some money. And that's because we lost $45,000 here. So this was about 590. We lost about $45,000 on this market bounce. But that's not terrible because this is our hedges. We're supposed to lose money in our hedges, and our longs came back and gained much more. Probably our longs gained $100,000. So it's fine, but still, I don't like to lose. Why should I lose $45,000? So we quickly turn around and sell $50,000 worth of premium to cover what we lost. And this is why the short-term portfolio does phenomenally well, because we're always recouping our losses by selling premium. And we talked about Levi. Levi had good earnings. It was better than expected. People thought it was going to be bad. But the key to Levi is you look at it and say, well, what went right for Levi? And that's what we analyze here. What went right for Levi? And therefore, what should we be looking at in their competition? So companies that own the consumer relationship can push the mix, which includes Nike, who we just bought into, Lulu, who we just got out of because I'm sick and tired of them not executing. And meanwhile, Nike hasn't executed at all, but I believe Nike can execute. I have actually lost faith in Lulu being able to execute. They're just doing a terrible, terrible job of managing their issues. So Levi didn't avoid duties. They managed them. They had a plan, blah, blah, blah. So don't forget size and scope, though. Levi is a tremendously huge company, huge international footprint. They're able to move things around and juggle with the tariffs and all that. Not every company can do that, but still there are other big companies that can do this sort of thing. That's what you want to be focused on. This was funny. AI has the worst sales pitch I've ever seen. AI has the worst sales pitch I've ever seen. Our product will make you economically useless and possibly kill you is not a value proposition. That was a great article. So anyway, so I run down. These are articles I like that I've been reading. Let's see. Why was the timing wrong to sell new SQQ? All right, there's some other stuff we talked about there. Oh, and then this is Warren. That's right. This is Warren's thing that we just did right now. So that's how stuff finds its way into the chat. That's how we use the AGIs during the session. And this is how things evolve. So right now we're kind of, we're stepping back. We're just watching and seeing what's going to happen. We'll see next week if there are things to do. And next week, don't forget, it's portfolio review time already, which is killing me. I can't believe we have to do portfolio reviews already. But next week is going to be portfolio reviews, and big decisions have to be made, and we'll be coming up on the next ceasefire decision. Because before you know it, the thing is expiring, right? Because if it started yesterday, then next Tuesday is 1 week, and the Tuesday after that is going to be the next week. So we're going to be coming right into another thing where we don't know what's going to happen, or maybe it'll already be in tatters, and we'll be at war. The war will be going full swing again. I don't freaking know, which is why we're not doing anything right now. We're just watching to see what happens. There's no emergency. We're not being forced to trade. We gather information and we wait and see what goes on. That's our plan right now. All right, I got to bring this to a close. Otherwise, we're going to run out of tape. Okay, I know you said that. The last guy is Brad. Brad says, back to what you said about releasing the allocation block. Does your mindset start with 20 allocation blocks? If you have 200,000 or more, you should really have 20 allocation blocks. If you have 100,000, 10 allocation blocks. Because otherwise it's unrealistic. If you had 20 allocation blocks in a $100,000 portfolio, you could only trade stocks that are less than $10. So it'd give you a very minor scope. That's why. So if you only have $100,000, you should really have like 10 allocation blocks. So it's some realistic number that you can trade, and maybe trade $10 stocks, even some $15 and $20 stocks. But if you cut it too small, you can't trade anything. It's limiting what you can get into. And you allow up to 60 stocks in the LTP's allocation blocks get released once the trade looks certain to hold. That is correct. So in other words, an allocation block in the LTP, it's a $500,000. It starts off as a $500,000 portfolio. It's already at $1 million, but it starts off as a $500,000 portfolio with $1 million in buying power. We have 20 allocation blocks of $50,000 each, but not every trade is exposed for $50,000. So if I am only using a quarter allocation block here and there, then I can have 80 trades if I'm all using a quarter of a block. So that's thing number one. Thing number two is, as we gain money, then we have effectively more allocation blocks. I don't just increase the size of the allocation blocks. We allow for more allocation blocks. I would rather have a more diverse portfolio than have bigger allocation blocks. So for me, I'd rather have all small ones. And obviously, there's wiggle room in there where I can say, okay, this one is 2 allocation blocks because I really wanted to have IBM, and therefore I'm giving it 2 allocation blocks or whatever. But generally, yes. And once a trade is safely on its way and it's hard to even imagine how you're going to get hurt, that's when you can, even though you have a live trade, you release the allocation block. It's like, yes, I have a trade. Yes, I sold puts. Yes, it could be assigned to me, but only if it drops 40%, and therefore I'm not going to count it. I have hedges. I am protected from a market downturn. So it's not like this is flying solo, because if the market drops 40%, then my short-term portfolio is going to pay me $1 million. And that $1 million then becomes allocation that I'm going to get. So, everything's not in a vacuum. You have to look at the whole balance and what you're doing. But yeah, you've got the gist of it. That's a very good explanation for an allocation block. All right, guys, got to stop. We're going to run out of tape and the whole webinar won't go. Thank you, everybody, for coming. I appreciate it. And we will do this again next week. All right. Take care, folks. Oh, wait. No, that's not right. So confusing. I don't know what I'm doing. Pause recording? I'm not really pausing yet. Close. No, that didn't work. People, chat, questions, materials, settings. Is it a setting? Nope. I do not know how to shut this down. Leave. Oh, there you go. Ha ha.